Hi, it's Friday, June 6th, and this is our weekly mortgage market video for realtors and clients who want to be in the know. Each week, we share with you insights on what's happening in the mortgage industry and see what's going on with those pesky rates. Let's go ahead and dive into those rates and see what's happening in the market. Now, currently, the 7-day average is hanging around and leering at basically the 7% interest rate. Not quite liking it, but not quite hating it enough to break up and permanently walk back to the sixes we all so dearly loved. It's kind of like a bad reality TV show and someone lost the remote control and can't change the channel. In other news, FHA and VA are still hanging around just below 6.5%. And while rates remain closer to the sevens rather than the sixes, home listings are hitting an all-time high of $698 billion level, almost $700 billion. Now let's keep that in perspective though. It's based off of actual values and not off the number of homes listed. So of course, prices and rise and inventory values have also risen. So the number should be higher. Basically, they're comparing it to like when things were in 2012. Of course, values are higher. And honestly, values were significantly lower all the way back in 2018 and 2019. So more homes were actually listed on the market as far as the number of homes. However, we're pretty much really surging with the valuations here. Okay, and commercial real estate is not to be left out as office towers, well, the older ones, are kind of seeing delinquency rates as tenants move to newer office buildings. Now, this is not something new. This has been something building since COVID. Office buildings have not seriously climbed back out of their hole since the days of COVID. We're talking large office towers. And actually, San Francisco actually is leading the way. They're actually still shining a bright light on this issue of vacancies above 35%. And so far, less than 10% of those office buildings have even space planned for a residential conversion. So they're not really moving and adjusting in ways that they probably should. In other news, Fannie Mae decided not to be left out of the AI race. And yes, they are considering whether or not to go back to independent rather than being under the conservatorship of the US government. They've been fighting for that for years. And quite honestly, they're making some large efforts to do so. Now, one of the efforts is to join with Palantir. Palantir is one of the leading AI companies. And what they're teaming up to do is to try and launch an AI fraud detection technology partnership. What this is hoping to do is to help detect fraudulent loans before they ever get started and off the ground. And as more inventory builds, we are seeing more buyers kind of freeze up while in escrow and under contract. And basically in April, 1 in 7 home deals were canceled in April. Now I did hear in May that it was almost 2 in 8. So a little inching up just a little bit higher each and every month. But seriously, y'all, think about this. The same home 3 years earlier, buyers were clamoring to pay over listed prices. Here in Texas, they were $20, $30, $60, $100,000 over listed price. And yet, now a small child takes a crayon to a wall, they can send a buyer running. Just kidding. But take a look and have some perspective. Every home has issues. Take some time with buyers to explain what a home inspection looks like. Take that time to explain that there are repairs that can be done. Okay. And it's a great time to chat with buyers, with homeowners right now to see if they might be carrying just a bit of household debt like credit cards and auto loans. There's a good chance they have more home equity than they do availability in cash. So it might be a good time to kind of trade out some of the home equity for a little bit of cash on hand. Now, there's currently a 17-year high on HELOC demands where homeowners are trying to pull equity out of their homes rather than cashing in or trading out on their low 2% or 3% rates. Keep in mind, the overall payments will go up in consideration usually rather than just doing a full cash out. If you want to take a look at either product, give me a call. All right. Now, not all areas are impacted, but about 44% of listings are sitting on the market for about 60 plus days. Now, there are some nuanced markets that are hitting the market, but these are impeccably priced homes and in impeccable shape in hotly desired areas. And I think it's time to declare the pandemic era over for Austin. As our kids called it mini LA, apparently, Austin has lost its top slot for millionaire magnets. Now Scottsdale, Arizona is pulling in all those top earners. So kind of interesting. Now, let's get to a little bit of the lighter side. Apparently, it only takes 2 years of exercise. This is not according to my trainer, who I would not listen to anyway. I'm just kidding, Sam. But apparently, it only takes 2 years of exercise to reverse 20 years of aging in the heart. And that's according to one of the longest randomized studies and trials on exercise. So apparently, you can reverse aging when it comes to the heart. Now, here's our mortgage meme of the week. We've got multiple offers, but wait, the other buyer's loan is not even pre-approved. So at the end of every video, we do try to address when the best time to buy is. I do want you to consider it's almost like planting a tree. Best time to buy was 20. Best time to plant a tree was 20 years ago, and second best time is tomorrow. So if you have more than $5,000, have higher credit scores, higher than 600, you may want to consider, or even, have more than that. Quite honestly, you may want to consider whether or not it's a good time to buy, because guess what? Got to pay the rents no matter what. So, the interest rate on rents are 100%. So it might be a good time for you to look at buying a house. A lot of times you can get the seller to pay for your closing costs and get a lot more away from it than you could in a hotter market. So if you like this video, please follow us on any of our social media outlets. We're on LinkedIn, Facebook, YouTube, and the artist formerly known as Twitter. Thanks for watching and hanging out all the way to the end of the video. I'm Robin Hart with the Home Loans with Hart team, where we are here to help you build wealth through the financing of real estate. We'll catch up with you again soon. Thanks so much and have a great week.